Hi, everyone. Happy Sunday. We thought we would take today to have a conversation about financial planning, insurance planning after a dementia diagnosis. We've heard a lot of your comments on beingpatient.com. A lot of people saying that they're tearing out their hair trying to navigate insurance, financial planning, especially in the US, for those in our audience who are here in the US. So we thought we would go to an expert today to really understand what we should be doing, how we should be planning. Joining us now is Kim Natovitz. She is from TriBridge Partners and joins us from Maryland. Thanks so much for joining us, Kim.
Happy to be here.
So it's not really a Sunday topic, but might as well do it while we can. And it's an important one. We have heard so much from people who start to plan when there's a lot of urgency. And when I say urgency, what I mean is their partner, their spouse, can no longer really take care of themselves anymore financially. They have to maybe quit their job. They go from a 2-income household to a 1-income household, and it becomes very draining, understandably, for the family. So, when should we start thinking about our future planning? Even, is it even before we have a diagnosis?
That's a great question. And I think you're right. Once the house is on fire, so to speak, we really can't buy homeowners insurance. So I think that we all have to think about planning for long-term care really as part of our overall financial plan. And for many people, it really is the missing piece. We're mandated to have car insurance. If we have a mortgage, we have homeowners insurance as an example. And then most of us will obtain our health insurance either through an employer or through an exchange. But long-term care planning is something that most of us have to really tackle on our own. And I think if you have a family member who has had, Alzheimer's or dementia, as an example, it's especially important for you to really look at beginning your planning sooner rather than later.
Okay, so let's just first pick apart long-term care insurance.
Sure.
I've spoken to people in the insurance industry who have said that they're actually not offering long-term care anymore for the very reason that there's huge amounts of aging population, number one, and also the worrisome rates of an increase in dementia diagnosis. And those two things alone can be very taxing for someone looking ahead, especially now that the baby boomers are all aging. So is there long-term care available now?
There is. There are fewer carriers that are writing long-term care insurance, but some of that really has to do with the investment climate at this point in time. There are some insurance companies invest largely in fixed income. They pay claims from reserves and from premiums. And right now, insurance companies are having a tough time really earning anything on their reserves. There have been a number of carriers who entered the long-term care insurance industry and decided that they really just weren't getting enough market share. And if it wasn't something that they were really selling enough of, the ROI on other products was really, just much better. I think we've seen a shift really from the traditional long-term care product exclusively to life insurance policies with long-term care riders. There are also annuities with long-term care riders. There are short-term care products. So I think what we've seen is that over the last 25 years, there is more of a portfolio of products in terms of planning for long-term care, not just the traditional standalone product, but there are still a lot of good products available.
So this would be rolled into your life insurance. For example, you would have long-term care attached to your life insurance policy instead of just an entirely separate product. Is that what you said?
Correct. So there are, employers are offering life insurance policies with long-term care riders, as an example, that are meant to be ported when you retire. Insurance companies are also offering I think on almost every carrier at this point in time has introduced a long-term care rider on a life insurance policy. There are annuities also, and then
So
short-term care.
So what specifically do they cover? Like, is it, okay, I'm working, I'm middle-aged and I have an employer who has maybe an offer. I want to take out a life insurance policy and it says, okay, there's long-term care benefits to that. What am I getting?
Sure. So you might be getting a life insurance policy, maybe anywhere from $100,000 to $300,000 of death benefit, that you can accelerate the death benefit during your lifetime if you need to pay for long-term care, and whatever
Does that
you
mean
need.
that I can use my death benefit while I'm still alive should I need?
Correct.
Okay.
Correct. Exactly. Exactly. And those policies, I think, can be very attractive for some of us who long-term care insurance, unlike health insurance, where we're typically buying what I would call more first dollar coverage. With long-term care, most of us who buy an insurance policy, we typically plan to pay for some of the expenses out of pocket if we need to hire a professional caregiver. Many of us will envision receiving some care from a spouse or a partner. So insurance is, one of the ways that we will fund the cost of care. But unlike health insurance, it may not be the first product that we rely on.
Okay, and let me tell you a story that I've heard more
Sure.
than one time. It seems to be common in the sense, okay, so we know that Medicare deals with 65 and above, right?
Right.
You're 65 and above, you're entitled to Medicare. But Medicare doesn't really cover in-home services as I understand it.
Correct.
It's more like hospitalization or, doctors, procedures, etc. So if you are diagnosed with dementia and to the point where you actually need in-home care, some people turn to Medicaid, right? But the story that I've heard around this, and I don't know how much of this is correct because it's from people in our audience who have said, but I have to spend down my savings in order to qualify. So you basically virtually have to bankrupt yourself in order to qualify for Medicaid. Is that true?
So I would say yes and no. So Medicare was designed to pay for really skilled care that has a beginning and an end to restore function. So by definition, since dementia is typically irreversible and there is no skilled care that can essentially, return a person to turn back the clock, so to speak, Medicare doesn't participate in the cost of care for someone who has Alzheimer's or dementia. So Medicaid, it really depends on your circumstance and what state you are in. So there are certain states where there may be different opportunities in terms of to buy a long-term care insurance product that has what's called partnership protection. So these are policies where, in addition to what Medicaid says, you can set aside, as an example, for a community-based spouse, there can be additional monies equivalent to what was paid out under a long-term care policy so that the person who is going to be left, quote unquote, in the community not needing care will have more assets from there. This is also where I think it's really important to consult with an elder law attorney, because while you do have to meet certain income thresholds in order to qualify for Medicaid, there may be ways to shore up, quote unquote, the house for the person who doesn't need care. In terms of, can you, use assets to pay off your mortgage or other strategies, or even create a stream of income depending upon the state that you live in, where a spouse could have some protection. But in general, you're right, Medicaid typically does require that you deplete a lot of your assets. But there are also, I think there are a lot of subsidized programs available through various states for adult daycare or other types. Now, certainly during COVID, many of those are not available. But, in my community, there are a lot of senior services that are, tax exempt organizations that rely on grants and individual contributions, and that can provide some respite care if someone is caring for a family member who has dementia, as an example. I think the Office on Aging in each community can be a great place to start to find out what resources are available to support individuals within different communities.
Yeah, because it does really vary state to state in terms
State
of,
to state and county to county, quite
yeah.
frankly. Yeah.
So we have a question. Can you tell us about how disability insurance can help?
Sure. So that's a great question. So disability insurance policies are income replacement policies. So I had a client just recently, as a matter of fact, who he had a stroke and he was not able to return to work because of paralysis and cognitive issues. So his employer had what's called a short-term disability and a long-term disability plan. He no longer received a check from his company, but he received benefits from both his short-term and now his long-term disability carrier. And some long-term disability policies also have additional benefits if someone needs long-term care services. So his policy actually provided an additional benefit that helped pay for some of the home care. But disability insurance is income replacement and really doesn't address, unless there is that long-term care rider, expenses associated with home health care or if someone needs to be in a facility, as an example.
I mean, and for dementia, you're talking about, a number of years in some cases, right? I mean, the person, after you're diagnosed, there's not a lot of care that's needed per se, but, as a person goes longer into the disease and into neurodegeneration, you're talking about quite substantial care in a lot of cases.
And that's very true. So a lot of the clients that I've worked with where, a spouse or a partner has had dementia, initially there really hasn't been any paid care that's been needed. Responsibilities might shift between the spouses where, the person who maybe was more financially literate, who has dementia, now those tasks are, given to the other spouse or vice versa. But you're right, it could be a number of years before somebody needs, full-time care, correct?
Is it too late once you get a diagnosis to get any type of insurance?
It is too late for you to get insurance if you are the person who has the diagnosis. But I do think it would make sense at that point in time to think about whether a spouse or a partner should have insurance, knowing that perhaps assets are going to be depleted more quickly for that spouse that does not have any insurance. So I do think it makes sense for the spouse or partner who doesn't have the diagnosis to investigate if that's appropriate.
But that wouldn't care for the spouse. I mean, so let's say the husband is diagnosed with dementia, the wife is okay. So you're saying the wife should look into longer term care insurance for herself.
Right.
Is that right?
Yeah,
for herself,
exactly.
not cover the husband, right?
No. Now there are some carriers, however, let's say, and I used to say lightning doesn't strike twice, but I see that it does. There are some long-term care insurance policies that may have a rider that will pay additional benefits if the healthy spouse becomes disabled and needs care assuming that she was the caregiver for the disabled spouse. So sometimes there can be, some planning that's done after the fact. Sometimes some families will look into buying an annuity. I've seen some strategies around that where there is, some income that the person can't outlive in terms of paying for care.
What exactly is an annuity?
So an annuity is where an insurance company, if you give them a deposit, they will guarantee an income for that individual's life, or perhaps for that individual's life, as well as something for a survivor, as an example. So there can be
On their
some.
earnings? Is it based on their earnings or?
No, it's based upon whatever deposit you would give to them, almost a money purchase idea.
I mean, the cost of care can be staggering
Mhm.
in this country. What is the rough estimate of costs for home health aid, daycare services, and long-term care?
Sure. Okay. Adult daycare is usually, because I find often it's subsidized. I see adult daycare programs that are, anywhere from $60 to $100 a day, as an example. The cost of having a home health aide, somebody who comes into your home and is providing care, those costs range anywhere, I'd say, from, you know, $15 to $17 on the low end to as much as $25 or $26. Care in a facility where someone needs, memory care, can be anywhere from, uh, you know, $6,000 to $8,000 a month, and in some communities, anywhere from, over $12,000 a month, depending upon what part of the country you're living in.
And in which situation would memory care in a facility be covered?
So, memory care in a facility, for someone who, are you talking about in terms of Medicaid, as an
Yeah,
example?
or if you have a loved one and you've decided you need memory care for that
Right,
loved one,
right.
so what scenario would cover that, or is a lot of it out of pocket?
So it's largely out of pocket unless you have a long-term care insurance policy. Long-term care insurance policies will pay for care at home, meaning you're bringing the healthcare delivery system to you and you have an aide that's coming in, sometimes just for a couple of hours a day, as an example, to give a spouse or partner some respite care. It will also pay for care in an assisted living facility or in a skilled care facility from there. Depending upon the state, again, Medicaid. So in Maryland, as an example, where I am, Medicaid does not participate, does not really offer home care, as opposed to a state like New York, where the Medicaid program for home care is much more, robust from there. So in Maryland, as an example, if you don't have long-term care insurance, if you have exhausted, your assets and you can qualify, Medicaid will pay for care in a facility, as opposed to at home.
Right. I want to just touch on the topic of genetics because more and more people are learning their genetic status, in particular the APOE4 genetic variant, which doesn't mean you're 100% going to end up with Alzheimer's, but does give you an elevated risk. Now, we've been told over and over again that insurance companies aren't going to get this type of information, but there's a lot of skepticism around the topic.
Sure. Yeah.
What do we know about, let's say someone has innocently gotten their 23andMe and found out that they do have a genetic predisposition to Alzheimer's. Now that information now is out there, right? I mean, it's supposed to be protected in private and whatnot, but it's still out there. Is there a risk in that?
So I don't think so at this point in time. The insurance companies are, the underwriting for long-term care insurance is, first of all, a telephone interview, usually where there's cognitive screening. And then it's usually records from your primary care physician or specialist, as an example. And they're usually not going to contain that type of information. However, carriers are beginning to ask for information about family medical history. Specifically, do you have a parent or sibling who has a diagnosis of dementia or Alzheimer's? And there are some carriers that are limiting the amount of benefit that an individual can buy when there is already family medical history, as an example. But even with the limitations that some carriers are placing, you can still buy, a significant amount of protection.
What age do you think people should buy? I mean, I'm assuming you think long-term care is a good thing, or does it vary? Yeah.
I think that's such an individualized question. But I can give you a couple of generalizations. First, I would say if you have a family member, a mother or a father or a sibling that has a diagnosis of Alzheimer's or dementia, I might look at purchasing coverage sooner rather than later. Because underwriting can change. And right now, we know that some carriers are beginning to limit benefits. So I would want to be able to evaluate whether this makes sense, while I still have the opportunity. Then I think it's a question of everybody's individual financial situation. Um, you know, the as I always say, perfection shouldn't be the enemy of good. So having some long-term care insurance would certainly be better than not having anything at all. But I think, we all have priorities in terms of looking at our overall financial plan. But again, don't let perfection be the enemy of good. And certainly having some long-term care insurance would be better than not having anything at all. I would say that most people begin looking at long-term care insurance, I would say on average, about a decade before they retire. And so I'd say, most of my clients who are investigating whether this makes sense or not are probably beginning to look at this, in their 50s or so. Younger, if they have significant family history around needing long-term care.
Right. So there's just a comment that's being made right now saying if a person cannot afford memory care, one applies for Medicaid to cover the expense. If there is any retirement income, it all goes towards memory care apart from $50 a month. That's kept for patient expenses.
And that would be true for someone who is single. However, if you are married, depending upon what state you live in, there are typically allowances for what's called a community-based spouse to keep some assets. That's why it's really important to get information as early as you can with regard to, what you can do if you have a spouse or a partner to make sure that they will be able to live independently, as your needs for care increase. But that's true.
So what can people do to help manage all of this? And there's a question, who can help us manage our funds, in the long term and from day to day. So if people need help, which we've heard a lot of desperate people say, I've spent all day trying to navigate, the Medicare, Medicaid system, and I've been on the phone and I've talked to 20 different people and I have no answers to my questions. So where do people go for help?
So I think there are a couple of different places. So, while people who are planning for long-term care obviously want to be very careful with how we spend any money, there are what's called aging life professionals. And sometimes maybe paying for some time with an aging life professional, having a conversation with them, I think that may lend itself to a lot of information. I also would suggest the National Association of Elder Law Attorneys. Their website is a great resource because you can find elder law attorneys in your state and often in your county. And what I find is they tend to post a tremendous amount of resources in their blogs and so on from there. Um, and then, of course, the Office on Aging as well. I would say there are also different financial advisors who specialize in working with families who have Alzheimer's or dementia. So those might be some places to find, some resources as well.
Right. What about okay, so there's care of the individual. There's also, could you be covered for things like home modifications that you have to make inside the home? Is there insurance for that?
So if you have long-term care insurance policies typically have some benefits specifically for some home modifications or for a life alert or other systems for individuals to be able to be safe in their home.
Right. So what is how much should we spend? Let's say we don't have long-term care yet, but we want it. What can we expect to spend? What's the range?
So I would say that, to buy long-term care insurance, I would say that many individuals can buy some coverage for as little as, maybe $2,000 a year, depending upon how much coverage, they want to have. And that would be for a long-term care insurance policy. There are short-term care policies which will provide benefits that will be for a year or less, as an example. That can be less expensive, but I think you can certainly buy some long-term care insurance for a relatively small cost. And again, the idea being, let's not let perfection be the enemy of good. I also think that more of us should, be looking at whether a reverse mortgage is something that could be appropriate for people who want to be able to stay in their own home. As an example, I think those programs, there are more of them available, and I do think that they're going to be another, source of funds to help pay for care.
How would a reverse mortgage help pay for care?
So, well, if you have equity in your house, you can essentially find a mortgage where instead of your buying your home through a mortgage, where you can access the equity in your home and receive essentially funds from that equity in your home. And that loan can be extinguished, when you leave the home and sell it. And I think that that's going to be, another source for individuals who maybe have not had an opportunity to plan for care, but want to stay in their own homes.
Great. Well, Kim, thank you so much. I think this conversation, you're really great at it, making things more simple to understand. I'm sure it's much appreciated. And you certainly now have me thinking about going out and purchasing long-term care. It's always in hindsight, right? If you don't do it, you think, oh, I should have done that. But
absolutely.
Yeah.
And thank you, so much for having this program and, a venue for people to get their questions answered.
Yeah.
So I'm happy to have helped.
Thank you so much.
Okay.
So if you missed any of this interview, please go to beingpatient.com. We always post these interviews. If you have more questions, feel free to post it in the Facebook that you're watching on, or you can also email us at info@beingpatient.com. Don't forget to sign up for our newsletters. Our newsletters always keep you updated as to when the next upcoming talks are, or you can go onto our website, beingpatient.com, and look under the talk tabs, and we'll let you know about upcoming talks. Thanks very much for watching, everyone, and have a great Sunday.